Okay, we're back, and basically, there has been a slaughter in the market. Okay. So, we did a bunch of things to safeguard our positions. Quickly go over what exactly we've done. So, put it quite simply, from everything that we've done today, Terminal 1 saved around 45,000 further potential loss that we could have had, and Terminal 2 we have saved around 50,000. First thing you do when such a situation happens, literally everything. You look at Nifty, it's just a broad market sell-off. Massive, massive. First thing we did was unwind our long position, or the puts that we shorted, we bought them back. In certain situations, we sold the future to temporarily cover our risk. So you can see Bajaj Finance future, we sold that as but at the same time, we don't want to just book in a loss. So for every time we've sold, or rather purchased an in the money put back, we sold an additional out of money put, so that when there is a recovery, or rather if the crash stops at this point, we will come out on top with too much of damage done that is not reversible. So the first thing I want to do is look at the health of our positions. So the Asian pin short straddle is fine. The Asian pins long by shorting the put is also fine. Bajaj Finance, we've squared off our puts and then sold additional puts, but continued to crash, so it's not doing that well. But these are all out of the money, and they're for October. Too concerned about. Uh, you have an in the money put. Okay. Which is why we are long one. As well exit. This fine. Don't want to keep any positions that we entered by. Plan was to exit position, and we ended up buying one addition. These are all still out of the money. Way too much on that regard. Okay, so the Bharti Airtel paid off the in the money puts, and we have sold an out the money put for October. Airtel down. One point it was down 7%. A little bit of a pullback. Gale as well, it's still out of the money. Okay, so HDFC still within our break evens. We're gonna hold for now. We wanted to break below 1700 to exit the longs. 1690 is our break even on HDFC Bank. 2000 put one this that Infotel. Okay, ITC. We're gonna exit ITC. Effectively, they will nullify each other. 180 put. Okay, yeah, see, here's what goes. Exited it twice. You keep the 170 October put. This will actually take delivery. Exit this call as well. Really not much. Need make it 35 paise. Okay, the Larsen position. What do we do here? Both expiring in September. We're gonna exit both of these, and we're going to sell a put for October. Sell this. 18, 35. We want this to execute right away because of the high wicks. So we will lowball it. This is fine. What price of ITC? 76. Paying like 2 rupees. Okay, so we've considerably reduced risk exposure here. See, are we short any other puts which are in the money? We short this put, but we're also short this call, and balancing each other out. So nothing to do there. Also, the wick spike greatly contribute to the fact that we're losing. I mean, we're losing like $300 on this put. We will keep that. There's not much point in this either. We will September 3004. Okay, this we keep. Bharti Airtel. Okay, that's out of the money. These are out of the money. and go into the money. I have sold calls. What I will do is HDFC Bank in the money put okay, 48 if it is to buy for 50. 40 minutes to go, and with today's big spike we really have to take advantage of a higher premium, so we're going to add a lot of October positions. Basically right now what we're doing is unwinding a lot of the September positions and adding to the October position. Hey, so regardless, basically everything we've done right now, so this is down to save around 46,000 by doing that, otherwise we would have been down about 75,000 or so. Similarly, we save money here as well, about 52,000 in 2 lakhs in profit. We're still profitable for the month, just that this unforeseen decline today, Nifty is down ridiculous. Context, wow, so that's 1 2 3 5 7 days of gains wiped out in the day. Okay, once again back to checking the health. Are we long any September puts that are in the money? Doesn't seem to be so. Reliance has found a support 2260. Oh, but the volumes are quite high. Okay, in terms of fixing, are we have to do anything else? Take a quick. No. Good. Yeah, the first thing we did was in Bajaj Finance, which is our largest exposed position, really. Had crashes, we bought back the puts. That served us really well. We bought it back much cheaper. We would have had to had we waited. We also sold some puts, and that didn't serve us as well. We sold puts here. Here as well. Bought back the puts. And that did as well. But we also sold some puts, but these puts are out of the money. We're in a pretty good place. So, I mean, this is one of the most important things like while trading. So potentially you will have days like that. Most of the time the market is always sideways, but there are days when the market decides it's going to make a big move. And on days like that, to keep the emotional stability, to objectively diagnose your positions rather than freaking out and just like exiting everything, it's really important to keep like a frame of mind wherein you're in control of what exactly is happening. you are going to have days when down the amount is down, crashes 2% in a day, Nifty Bank down 3%. The positions that you have just ridiculous falls. You have Bajaj Finance, which was our largest position, down close to 4%, and Bharti Airtel, which also was a pretty big position of us, close to down 5.5%. But this stuff happens, and you need to maintain that emotional stability. What have we done here? We have not a single short put that's in the money, and we're selling out of the money puts at a later expiry to recover some of what potentially we have lost in this fall. So keeping that stable state of mind wherein you're able to still function objectively without freaking out and exiting everything you're in, very important. So by doing this, we have saved about, I would say, 46,000 here, 51,000 here, so about a lakh. We saved a lakh of rupees just by keeping calm and following the plan that we had in mind. Now what are we going to do? Now we are going to identify where we can sell a few calls and if we can sell a few puts to potentially buy shares really cheap. Really not much left in this as well. We can exit this. Point keeping it. We already placed an order to exit it. Not much meat left in this call. So now every position we have is either out of the money, especially if it's in September, or it's in the October expiry. You also want to think of it this way. Let's say we're holding these shares, we're holding shares of any of these companies. You would have damaged your portfolio quite drastically. Okay? Like just by the fact that the market is down close to 2% and financials are down 2.5%, little more than 2.5%. It would have considerably damaged. Now we have half an hour left to go. We need to think of what new positions we want to enter. We have entered a few new positions by rolling it out in time and rolling them. There's a good opportunity. I mean, with a correction like this, being where it is. Take a look at green. Maximum increase in IV in IndusInd Bank and current highest IPV. Okay, so we have Dr. Reddy's not corrected much, a little bit. I think he's still up. Okay, so here's what we're going to build positions in three layers. One will be Bharti Airtel. One, sell the 400 put. Looks like 400 put expiring in October. Return. Yes. 2430 put. Not a bad. Hmm. Hmm. We have those. Beauty of it is, unlike all the other times previously, this is not a sudden fall. Fall in Nifty, very gradual, broad market, high volume. Clearly, institutions exiting some of their positions, and you can tell by looking. You can tell by looking at something like Reliance. This is not a one big rate. Different points, people try to buy the dip. People got the dip here, people here, quite considerable. And now we're again testing the low, base low, consistently forming lower lows for the day. Okay. Have those orders open. Need to absolutely be prepared for days like this. This will happen. Market will make ridiculously large moves. Okay. And there is nothing you can do. You need to have a plan from before when you take a position as to what it is that you're going to do if that position goes against you. As an option seller by default, you have a certain buffer. When that buffer is broken, you need to quickly look into where it is going to start cutting your positions. Especially in a market like this, you want to be as low in your leverage as you can possibly be. You do not want to risk. You're going to make money every month in the few months that you don't. And at the end of the month, we're actually profitable for the month. Considering the month that this has been is a very good thing. Not about how much you make, it's about how much you of what you make. And there we go. Okay, that's executed as well. Good. Now the first question might be, why are we selling puts into a falling market? Because calls are going to be really cheap, and at the end of the day, this market could probably correct to around the worst case scenario 10,800, 10,600, 10,500. It's certainly not going to touch March lows. And the points at which we're selling puts, or rather our break evens with the levels at which we're selling these puts, are somewhere around the COVID lows. But due to the spike in VIX, they're going to be available for very decent premium. Take advantage. Okay. Any other exposure that we got? Okay, so in a way, I think the day's low is kind of being respected. I guess you can say 11,250 is acting as if support. You had selling all the way to there. You had buying into the dip, and then that was sold into. Interesting to see this holds, or this continues to do what it is. Hmm. You know, something that would be like super obvious is, why not sell 10,500 for Thursday's expiry? Given the way things have been with this market, you really don't know. Like, anything can happen. And then this could reverse completely, and then you got screwed on the downside, and then you get screwed on the upside. The best thing to do at a time like this, especially when this unsubstantiated, is reduce your position sizing. Do not have more exposure than what you would like to, and if possible, to the extent possible, try to identify opportunities in really good companies that you can accumulate at these prices, or rather what we did by selling this here. Now if we get SBI price of 166, buy it. Okay, so is sort of taking support at 2260. Breaking. Have to watch. Look at our current Reliance exposure. So 2300 put, 2300 call, effectively making money on 1900 put is fine. Like the idea here will be buy the line shares. It happens to come to that level. I mean, SBI Life is perfectly in between. Not much to be done. We can exit this Sun Pharma position, all of it. We're making money on it. Why bother? No point in trying to get every last thing. Like these are positions have decayed like 90%, potential 10% upside. That's the case. Take the profit. I mean, don't lose 20% because you wanted an additional 10%. Fairly simple. Okay, so let's now take a look at what we have. We have an out of the money October put on Axis Bank, losing us money. Fine. But that's finance as well. Out of the money put, losing us money, but out of the money by 10%. So no problem. We have a call and a put. Short strangle. It's okay. It's doing all right. Making a little money. We have an out of the money call expiring in September, making us decent profit. We can take this. We don't want Bajaj Finance to jump back tomorrow and take away some of them. Okay. All right. Bata India, where are we with Bata India? Bata set 321. Our put is at 1260. It's expiring in 3 days. There's a little upside to this. You can hold on to this. Not enough. Out of the money puts on Airtel, currently making a loss, but really not much to do there. September call. It's fine. It's fair. It's far enough from the spot that there's no point in giving up this additional 2 rupees that we will make. Excuse me. Like 40 rupees, 30 rupees out of the money. Yes, once again, we see Reliance is doing what it does best, taking support at the same level. So you have 1, 2, 3 times jumping off that 2260 mark. ICICI Bank 300 put for October, nothing to do there. We have a short straddle on Hindustan Unilever 2100 expiring on September, and we have short put for October. This is fine. We don't need to. Yeah. I guess you could consider this a short strangle of sorts. There is HDFC Bank. Okay. All right. We're gonna get rid of this put. We're gonna add a put for October. Why am I doing limit trades? Because honestly, difference is going to be minute, and these are liquid enough, especially these stocks that you know that they're not going to get screwed over by liquid pricing. So okay, fair enough. 27.7 due to out of the money put, drastically out of the money. still, I would say 60 rupees is 20% out of the money. Nothing to be concerned. Out of the money, but close to being in the money. Close to being in the money. It's okay, we sold at a decent enough price. But if that support of 60 breaks, it might put us in trouble. Okay, so we're gonna square this off and we're going to sell a October dated put of 58. The strike price of 58. This is a slightly liquid. Have to take a look. We'll try to buy it back. Meanwhile, sell that later dated. See, you know what? We're not even gonna. HDFC got executed. We are not even going to roll this over. Sorry, roll it down. We'll just roll it over. How much are we getting? Not such a bad price. Okay. No liquidity though. Yeah, Sun Pharma. Not much we can do here. Just not much liquidity in this. Oh, and Reliance breaks the support. It will be interesting. See what point it's going. Say the next support probably like 2200. That's this run up makes it. We didn't consolidate anywhere in between. Went straight from 2100. This sell off could see a lot of follow through. Once again, we are extremely fine with the situation. We covered our risk. We covered our eliminated any additional leverage and cut down our position size. Greatly benefit. You know, things are going to get worse when some of like the fundamental heavyweights are getting smashed. Lance is getting smashed. Nifty is going to buy. In fact, the first thing we did was exit our Nifty. Here we had a bull put spread. The bull put spread. Exiting this alone saved us 35,000. And overall saved like 70,000. Sitting positions when we did. Okay. Back to reviewing positions on terminal 2. Everything is more or less manageable state. Let's take a look at. Yeah, Asian Paints is doing fine. October, these are all October, and these are all out of the money. And though we're losing money on this position, doesn't matter too much. Out of the money fund. And yes, okay, our M2Ms are slightly, if you look at it, down by 10% roughly. 10% down on an M2M. That's very much under control. That will come from the spike in VIX alone for that. Airtel October, out of the money. Out of the money. October. We can add to this. We can like reduce our risk strike price slightly. 650. Then I don't want to do anything right now because HDFC is at that pivot point wherein it's at 1710. We'll break 1700 and there'll be a huge spike in implied volatility and you get screwed by the VIX. So we'll wait, no rush. Okay, HUC positions fine. Yeah, September. We've anyway sold additional puts at thousands. It's got we got like another 10 minutes. Clear diagnose. Risk that we might have that we do. Okay, so this 200 call of ID, 15 paisa left to it. This is the position that we can. Okay, 920 call, 840 put. 20 call, 3 days. Move to keep that. A nifty short straddle. Okay, so yeah, we're still very much in the positive on that. Nothing to do there. Way out of the money put underlines. That's fine. Short straddle underlines as well. It's making us money now. This is the beauty of like selling non-directional. Like I took this position 5 trading days back, and Reliance is today is down 2.5%. I'm still making money on it, so I can't complain. Anything below 2,200 and in September is fine. It's way out of the money. Else call as well. Definitely not. Yeah, we're more or less very comfortable, I'd say. Hi Saurav, sorry I did not see your message. Hope all is well. Okay, this didn't take yet. Yeah, sorry for the okay. Sorry for the connection errors. I am having some unforeseen internet issues, but there's about 2 minutes left to go until the market closes, and it has been a hell of a day. We have seen this is a very structural decline, not a panic sell off, not stop losses being hit one after the other. This was clear selling on institution part and on part of institution. Just to like show you like reducing our risk. We have saved close to 1 lakh rupees here, and we have saved an additional 63,000. You can say 1.6 lakhs is what we saved just by sticking to the trading plan. Yes, for the month we could have been up a lot more, but we're still up 2,17,000, and this we're down 42. Still up for the month, and in a month like this, you can say you came out of it without destroying any of your capital. That's a pretty good, because in the market that was this month, you could have lost money if you were long, you could have lost money if you were short. It really doesn't matter. And that's about it. We are closing with Nifty at 11,222. You know, this is definitely a great opportunity to buy some really good quality companies at cheap valuation. Excuse me.